There has been a lot of hype about buying shares in September 2025 in Kenya, but the truth is not everyone is supposed to be buying shares. Not everyone is eligible to buy shares. And that's why today I choose to bring you a checklist. If you manage to tick yes in all these questions or in most of them, then you can know that you are ready and you can proceed into buying shares. Welcome to Finance Focus with Andrew, a platform where we engage in conversations that endeavor to enhance our financial literacy. In case you are coming across this channel for the first time, subscribe, turn on the notification bell so that you don't get to miss any of our financial tip. And to our point number one, like this is how you know whether you are prepared to buy shares. You have mastered savings and budgeting. You cannot invest in shares if your personal finance life is in a mess. You ought to have mastered savings, budgeting. You ought to be that person who is aware how much they save a month. This goes to what, but if you're in that stage where you are confused and your money still disappears without knowing in a month, you are still not ready. You still have a lot of issues to deal with because even if you go ahead and buy shares, it will just add chaos to the situation you already have. So if you have already mastered savings, budgeting, you have already made some other investments here and there, then we can say you are prepared to buy shares. Point number two, if you have dealt with high interest rate debts, it will not make sense for you to invest in shares chasing a growth of 10% per annum when you have a mobile loan where you are paying 20% per month. So go and first deal with the mobile loan where you are paying very high interest rate. Then you'll come back later and buy shares. Company will still be there, and the Nairobi Securities Exchange will always be there, and shares will always be there. But for now, you might be better first dealing with the high interest debt. But then, if you don't have any high interest rate debt, then you can proceed and go and buy shares. You have a growth mindset. You understand that growth might take time. Money to grow takes time. It is not an instant thing that you want to invest today, grow today, and harvest tomorrow. So if you already understand the mindset of money that growth might take some time, investing in shares is quite a long-term project, then you are prepared. But if you still think that you will invest today and live tomorrow, you are not still yet ready. You have a lot of work to do. Number four is that you need to be patient enough. If you have patience, you are good to go. But if you don't have patience, you will keep on buying and selling shares every time you have a small changes in price, and that will just bring you losses and will add to the chaos that you have. So if you are patient enough, you can proceed and buy shares. But if you don't have patience, you are still not ready for the Nairobi Securities Exchange. If you can do research about companies beyond the hype, you see, many people right now are buying shares of different companies just because of the hype. A friend told me, a certain politician said, but they don't do research. So for you to begin your investing in shares journey, you need to be prepared to do some at least basic research about the companies before purchase. So if you are prepared to do the research, then you are good to go. But if you cannot do any research, don't try investing in shares. And the final one, if you are building a portfolio, I wouldn't advise you to have shares as your first investment. You should be investing in shares to add to your portfolio, to add to an existing portfolio. You have a money market here, you have a circle there, you have some treasury bills there, you have treasury bonds there. So at least you understand the low risk investment. So you are stepping a step higher to invest in a bit high risk investment. So I don't expect to be, you have no any other investment somewhere, and you are getting to dive into shares. So the shares should come to add to your portfolio, but not just buying shares. You should be buying shares to add to your portfolio. So if you have an already existing portfolio, maybe you can dive in and add shares into it. But if you are starting your investment journey, there might be better option that you can start with. So that is my 6 point. You can tell me how much, how many you have ticked yes, and tell me in the comment section, do you think you are ready to get into buying of shares?